What's up, YouTube? Welcome to Everybody Eats Trading. My name is Mike, and my goal here is to help traders become successful, or as I like to say, help everybody eat. Each week, I present possible opportunities by going over chart and stock analysis to help you grow your portfolio and hopefully grow your knowledge as a trader as well. So if that sounds good to you, go ahead and hit that like and subscribe button. Really helps the channel out. And please hit that share button so that we can help everybody eat. First, I want to just apologize for not having a video last week. It was my birthday on the 28th, so I decided to take the weekend off. Spent some good time with the family, went to the casino, played a little poker, had a good time, won a little bit, then I lost it, but overall it was still a good time. But now it's time to get back to business, and man, has the market been going crazy this last 2 weeks. So for new traders, I want to kind of just highlight what's been going on and how to shift your investment strategy during these rocky times. So first, let's talk about what's moving the market. And first, we know that the stimulus just keeps getting delayed. You know, it got passed by the House, it seemed like it was getting close, but then of course the Senate, they kicked it back. So we kind of have this back and forth of, are we gonna get the stimulus? We're not gonna get the stimulus, we're gonna get it, we're not gonna get it. So that's kind of getting factored in. People are losing that comfort of knowing that extra cash could be coming in. Second, kind of playing off the stimulus, is bonds and how the bond interest rates have been rising like crazy. Since bond interest rates have been rising like crazy, you know, they haven't been getting bought. And as I said, that's linked to the stimulus because a lot of people know that when the stimulus gets released, new bonds will be created with cheap interest. So a lot of people are saying, why buy now? Why not just hold and wait for those new bonds with cheaper interest to come out? So with that going on, and especially how fast the interest rates are rising on bonds, that also kind of spooked the market and, you know, started this sell-off or correction. And third, personally, I think the GameStop short squeeze is still also having an effect on the market, kind of like it did the first time. If you think about it, if all these hedge funds are losing these billions of dollars, then they need to get some capital somewhere. So they're gonna try to liquidate some other stocks to try to keep their short positions open so that they're not forced to close those. So if you have these hedge funds, you know, liquidating all these other stocks, that's also going to put a lot of downward pressure on the stock market. So looking forward into next week, I'm still going to say like it's very optimistic. There's really no light at the end of the tunnel unless some drastic news comes out. And it's probably going to have to be a couple things back to back to help really push the market back into, bull market territory. So with that being said, what you want to do is you want to, take a look at your portfolio. You really want to trim down your positions. Anything that's really, really risky, you want to go ahead and just eliminate that and really put money towards your solid plays that you did your homework on, you had that solid conviction in, and you know that they're going to rebound off of this correction. So now that we highlighted that, let's go ahead and take a look at the portfolio. So now taking a look at the portfolio, we can tell we did take a hit. We're down a little bit over $500 with about $200 in unrealized loss. Now I did realize I did overextend myself. I had way too much money in and I didn't have any money pulled out. So now we're sitting with about $769 of buying power. So that way when we do see these better opportunities, we can go ahead and try to take advantage. All right, so taking a look at the plays, we have Rocket Company. Right now we're down a little bit on that one. I'll explain why I jumped into this play. CPSH, which is CPS Technologies. This one I went ahead and bought the dip, and I'm going to continue to buy on the dip for a good reversal play here. I'll kind of highlight the company and why I think it's a good reverse play. Next, of course, we're still holding on to Academy Sports, still waiting for when their earnings date will be released, and then also hoping that a short squeeze will take effect with that. And last, we still are holding on to TTOO Biosystems. As we said, we were going to hold on to this for a few months. I really like what the company is doing. Now, they had earnings on the 4th, and even though they missed their earnings, it still wasn't that bad. And they also projected that they're going to be selling a lot more of their machines this year. So if you take that into account, we can kind of use those as little mini catalysts every time one gets announced. So I'm really looking at this one as a longer term swing play. We might even extend this out a few more months, but really excited about how this can turn out and what the company is doing and what their plans are for 2021. Now that we reviewed the account, let's go ahead and jump to this week's plays. So let's go ahead and get into the first play of the week. That'll be CPS Technologies, ticker symbol CPSH. So CPS Technology designs, manufactures, and sells metal matrix composites components. What are those? Well, let's go find out. Metal matrix composite materials consist of a metal matrix with a ceramic reinforcement. At CPS, we make aluminum metal matrix composites by reinforcing aluminum with ceramic particles, fibers, sintered ceramics, or other reinforcements. So looking down here, we see it explains kind of their materials. Overall you get greater strength and stiffness, thermal expansion match, so they handle better in high temperatures for longer amounts of time. So okay, Mike, that sounds cool. What kind of market is this in? Well, we transition over to the markets. We can see they're in transportation, energy, telecommunications, defense, automotive, computing, aerospace, and oil and gas. So this company is touching a lot of different industries. They've been around for a while. They have some good partnerships already. They're currently already working with NASA. Their products were used in the recent mission to Mars. So as we can see, these guys are in a lot of different markets. They have a very long reach, and this company has been around for a while. They have no debt. So personally, I think this company is just now about to hit momentum. Now, why I think this company is about to hit momentum is due to the fact that they're in so many different industries, and their last Q4 earnings, even though they missed the earnings projected, and they actually had an increase in operation profits. So along with the revenue profits that they gained, they also received a nice contract with the Navy. On the 2nd of February, they received a purchase order from the Navy for their hybrid tech armor panels for naval aircraft carriers. Now, putting on my speculative glasses here, that is only an initial order. So if we think about how many aircraft carriers the Navy has, that could potentially turn into a lot of money for CPS. And then also what you'd like to see from a company that has all these different, new materials that they're coming out with are the patents to back these up so that nobody else can copy them, which this company has. This company has plenty of patents for majority of their materials that they create. So it's almost impossible for anybody to try to replicate what they have. Now, I'm not saying that somebody can't create something different that's good, but at least for now, with the components that they're building and making, nobody else can make those. All right, so let's take a look at CPS's chart. Okay, so looking at the chart here, we can see, back around January, it was trading around $8, and then it did have a dip down to around the $6, $7 range. But then at the beginning of February, it had a massive run up to the 22, even peaked out at $30. And then it's kind of been hovering there, slightly ran up to around the 27. But then of course, when the market corrections happen, it's been pulling down ever since. Now looking at this strong rally right here, this was right when the contract news came out about them and the Navy and what they'll be doing with their aircraft carriers. So that's when I think more people started realizing what's going on with this company. So looking at this short term and long term, this company is really set up in a great position. Now, even though their last earnings got hit in one aspect, they started getting a lot more sales in another area. So then if we kind of forward think about us getting past the pandemic and them getting back to their normal numbers, plus what they're adding from their new sales and everything in aerospace, I can definitely see this company doing a lot better in the future. So for a price target and buy zone, I say anything $15, $16 and below is absolutely a steal. For a price target, we'll go ahead and aim for about $23 to $24 just to get back into that consolidation range that it had earlier. And then hopefully by then we can get a better earnings, and then we'll see where it's at from there and see if we want to adjust the price target on it or not. So that's the first play for this week, CPS Technologies, ticker symbol CPSH. Okay, so the second company that I want to go ahead and cover is Rocket Companies, ticker symbol RKT. Now Rocket Companies is a holdings company, and one of their subsidiaries is Rocket Mortgage. Now Rocket Mortgage is an online mortgage platform which overall is supposed to make the process of buying a house a lot easier for your average retail investor. Looking at the page, Detroit-based Rocket Mortgage is the nation's largest mortgage lender. They've closed more than $1 trillion in home loans since inception. Rocket Mortgage became the first full digital mortgage experience in 2015. The company has ranked highest in the country for customer satisfaction for primary mortgage origination by J.D. Powell for the past 11 consecutive years, and also ranked highest in the country for consumer satisfaction among all mortgage services for the past 7 years. So in a nutshell, they've been doing business for a while, and they've been doing pretty well for themselves. So more recently, their Q4 earnings came out, and they had really great earnings. Taking a look, Rocket Company experiences explosive growth. Revenue increases 144% year over year to $4.7 billion in fourth quarter. Company announces a special dividend of $1.11 per Class A share of common stock. So this news just came out, and it's honestly an effort from the CEO to kind of push the stock price out of the trend that it's been following for a while now. So let's take a look at the chart. When the news came out about the dividend, obviously you could tell that it had a huge explosion in price, and then obviously it had its retraction. And if we're looking at the daily, it kind of came back to the 5-day moving average. So that's looking like a good support. But again, Rocket has been trading in this kind of zone between, 23? So between 24, 23, and about $19. It's just been going back and forth here. What's also been going on is there's been an accumulation of a short interest from hedge funds. So in an effort to push the shorts out and to get out of this funnel that they've been in, the company decided to offer the dividend to try to go ahead and to try to raise the stock price, and as well as push the shorts out. So once again, we have a company that's doing really well, and for some reason it has a high short interest on it. And for them to have a 30% short interest really doesn't make sense, considering, especially if we look down here, let's go to Yahoo Finance. If we look at Yahoo Finance and we come down to their last 2 earnings, we can see that they beat the last 2 earnings. So again, the short interest doesn't match up with what's going on with the company's fundamentals. Now personally, I do see this as a risky play because there's also another variable that's involved, which is the date set by the company for the dividend, which is March the 9th. Now honestly, that could play 2 ways. One way is we can have a nice run up until the 9th with more people wanting to buy in to take advantage of that dividend, or we can have that nice run, and then after the 9th, we could have a sell-off. So personally for me, the play here that I'm looking for is after the 9th, I want to see if there's going to be a run up. I'm hoping that it can hold its price range above, the $26, $27 range. And then if it does, then that really looks good moving forward for a possible squeeze, since the price is now out of that range that it's been traded in for so long. So again, if it does hold that price range above $25, then I'll probably go ahead and hold on to my position for about 2 or 3 weeks. If that price target does drop back down to the $24, $23 range, I don't know, I might consider selling out, also depending on the market volatility. Okay guys, and for my last 2 plays, these are more add money to plays, kind of to what I was talking about before, right? When you have a market correction, you want to go back to your solid plays, the companies that you have the most conviction in. So for me, that's going to be MP Materials and T2 Biosystem. First, let's take a look at T2 and see how it's been reacting. Taking a look at the chart, we can see that again, it was doing nice, had a nice little gap up, and then during the correction, it's been selling off. But we're here at the 190-day moving average, right? It went down below, but then obviously it shows that we had buying pressure that brought it back up. Now, does that mean that it has to hold here? No, but I mean, generally moving averages are good support, so we'll just have to wait and see what it's gonna do. So why am I bullish about this play? Well, they just released their Q4 finance statements and they met the expectation. So let's take a couple highlights here, right? Achieved record quarterly revenue of $7.8 million, including product revenue of $5.8 million, representing growth of 154% and 273% respectively compared to the prior year. So that's a crazy amount of growth, right? Second, they sold 57 T2DX. That's the machines that test for sepsis. So they sold 57 of them in 2020, including 47 in the US, more than doubling the US initial base. So to me, this is showing that the company's picking up, they're doing the right things. And then also let's take a look at what they're forecasting for 2021. So we scroll down, 2021 in financial outlook. The company expects full year 2021 total revenues to be between 24 million and 26 million, including product revenue between 16 million and 18 million, and research and contribution revenues of 8 million. The company expects to close at least 30 more of their instruments contracts in 2021. So to me, that's a lowball number, guys. I honestly think that they're being conservative and they just want to throw out a number that they want to hit, but they obviously had an increase in just the fourth quarter alone. They sold 21 of their machines. So they're saying in all of 2021, they're only going to sell 30. That's called being conservative. So think of the revenue that that's going to bring in once they start getting these machines out. Again, they also still have one more FDA approval to go out for that last panel. So long term, I think T2 is a perfect add to money play. Second add to money play would be MP Materials. And guys, that's just strictly off the basis of this company has been killing it. I mean, it was even doing okay 2 weeks ago when the correction initially started. And then this last week, it finally took effect. But again, this company is the only natural resource mining company in the North American hemisphere. Right now we have a trade war going on between China, who is one of the highest exporters of rare material. So if they're not going to give it to us, then that means just more business for MP Materials, which hopefully will be shown on their Q4 earnings report that's supposed to be on March 18th. So long term, I think this is just a great time to just continue to add to your position. Or if you're thinking short term, this is a play where I'll consider go ahead and getting a good entry position and riding it up to the earnings. But either way, long term, MP is going to have a great future. If we go ahead and take a look at the chart, it basically shows the same thing, right? Like I said, that first week of the correction, it still rose up to 51.77 for the high, and then it corrected afterwards. But if we take a look, we're slightly below the 20-day moving average. We did come all the way down and touch the 50-day, but as soon as it did that, you see the buying power come back and push the stock price back up. Same thing here, when this broke and came down, we pushed it back up. And then even over here, it shows that when the market price came down and touched the 50-day moving average, it bounced up. If we look over here, here's another confirmation that we have of, oh, it touched the 50 and then it started climbing again. So does this mean that this is the final stop for MP? No, it definitely could probably drop to about $36, $35 range, but long term, it's gonna recover, it's gonna go back to 50. Honestly, I have a price target of $70 just for this year for MP Materials. So guys, those are my add to money plays, T2 Bio along with MP Materials. Again guys, the market's really volatile right now. So again, manage your risk. If you're gonna try to take any short-term swing trades, you really wanna have a short stop loss on it. That way you really minimize your loss. But right now, you really wanna be looking at those long-term plays. But right now, there's tons of opportunity out there. Just make sure that you do your due diligence, do your research, have the conviction in the stocks that you're buying, know how long you wanna hold them for. That way, during this volatility, you're not shaking, you're not FOMOing out of your position, and you're not destroying your portfolio. So guys, that's all that I have for you this week. If anything that I shared was helpful, please go ahead and hit that like and subscribe button. And of course, hit that share button so that we can help the family grow. As always, traders, be safe, let's have a great week, and let's eat.